Alrighty, good morning everybody. It's Wednesday, June 14th. Let's jump right into things here. I guess the first thing I should talk about is the fact that we have our FOMC announcement here coming up at 11 a.m. Pacific, 2 p.m. Eastern. And that's going to be potentially a little bit of a trouble on the market, right? Sometimes we see the market kind of chop around in anticipation of the announcement, and then we see movement after. So just be aware that that's what we have on the cards here this morning. Did have PPI at an hour before the market opened here. That did have a little bit of a volatility spike there for a couple seconds, but nothing too important there with the PPI. But keep in mind, we've got the FOMC today. Could make things a little bit funky here until we get that announcement. What else can I mention? We also have, and I'll just type it up on here because I like to emphasize certain things. We'll go ahead and throw, why does this always give me trouble? Well, never mind. I can't find the tool. It's not popping up. We're going to have our weekly webinar today at 1 p.m. Pacific. I believe that's 4 p.m. Eastern. So hopefully you guys are there. Hopefully you guys have questions. I know a couple of you have contacted me saying, what is going on with the charts? I'm new to all this. I don't understand anything. Well, hopefully with these webinars, we can tackle all those issues. Like I said last week, I didn't have anything planned, and I wanted you guys to bring questions, and then no one brought any questions. So, and then I got I got an email, I got 2 or 3 messages saying, hey, I don't understand this, I don't understand that. And it was like, well, why did we have our webinar last week? So, hey, I'm not calling anyone out individually here, but if you have questions, that's the point of the webinar, so we can go through the things that you don't understand. So, perfect. So, Neil has some questions. I know there's 2 other people that contacted me yesterday having questions. So, bring your questions to the webinar so we can get that stuff ironed out. I'm going to talk a little bit about VWAP. So in these webinars, the idea is we're going to cover different parts of the trading strategy, and again, make sure that you guys understand what you're doing here and why we're trading these levels. So bring your questions. We'll be there today, again, pretty much at the market close. So hopefully I'll see you guys there, and as usual, it will be recorded and uploaded to a private video feed for you. So outside of that, I think we can go ahead and jump into the charts now. There are some cool things. Let's actually look at what happened yesterday and talk about that quickly there. Oh, there we go. There's the tool. Let's go back and remember that at the beginning of yesterday, we saw, and I'm going to bring up this 60-minute before we go to the short time frame there. This is what we saw coming into yesterday morning. And remember what I said, with that peak up, and we didn't see that major peak. It was right there. And I told you that with this type of formation coming up, we were coming right close to a market scaffolding level. The major retracement was just a little bit further. The fact that we saw this pattern of a potential bearish signal meant that there was a clue for a pullback. Now it completed just after or right around the open. So if we go down, and I'll just move this over so you can see the complete pattern here, it popped all the way up to there, and finally, and this is that candle that is printing while the market's opening, we got the bearish signal. So right around the open here, let's look at what happened on the short time frames. Whoops, wrong one there. So there's the New York Open, that white line you see. And that was the spike up that we were watching on that 60-minute, seeing potential bearishness from. And the market opened. Notice it held the FMA. It came right to the VWAP, which actually we're going to talk about today, the VWAP. And I told you guys this was going to be our first area of expected support coming in, out of the open here, which was right around that white line. Came in, I had an order sitting here 1 tick in front of the Hopel, right in between the VWAP and the Hopel there. It bounced 1 tick in front of the Hopel and came all the way back. So I missed that trade, but interesting to note that we got the rotation within 2 ticks of the first pocket we expected to hold. Again, not surprising, right? Almost every morning we lay out the areas that make the most sense for holds, and they work. So we missed out. I missed out by a couple ticks there on the first kind of impulsive move up. Held the 200 on the way up. This is another unbelievable level that we rely on here. So it could have been, if you missed out on the long here, you probably could have grabbed this again with one tick of risk for this push. And this is the ultimate high here, about 15 minutes after the open, where that 60-minute signal, if I could pull this back up, finally formed and kind of closed when you see the next candle. So that was the spike up and the pullback, and this is the major pullback that I was expecting from the 60-minute candle. So let's look at this a little bit more zoomed out here. The biggest pullback of the morning came from that 60-minute signal that we were anticipating before the market opened. So unfortunately, it didn't just happen right out of the open. Of course, they make things difficult. It's not always going to be a straight line and perfect. And they brought it up, maybe faked out some bulls to the upside, and then there was the pullback. The second thing about yesterday morning that I want to mention is we were still bulls. Remember, the market was still really strong. Everything we looked at was telling us that the market should continue to push. We just had that counter signal, and we expected some type of pullback from that. But ultimately, we expected more, higher highs going into yesterday morning. So look what happened. We got a pullback, got a beautiful bounce right off our hopeful for a beautiful play right into VWAP once again. So you could have grabbed 98 up to 04 for a little over a 5-point scalp. Again, taking very limited risk. And then what did they have to do? They had to duck right through hopeful. And then if you notice, they kind of, if you zoom all the way in, hold right off the back end of it twice there, and then pop right back up and then attempt to kind of break back out to the upside. So I think the sexiest thing that happened here, guys, yesterday was this pullback to the VWAP. So remember, we had the expectation for higher highs yesterday. We expected there to be a potential pullback from our 60-minute signal. That's the pullback. That was the biggest pullback of the day. And then we started to get back through VWAP to the upside and push up, and we made a new high for the day. Just a couple ticks from the morning high there, pushed a little bit higher, got through our scaffolding. So this pullback to VWAP, it also, I didn't even look at the retracement here, but it was probably just about 50. I was going to say it was just about a 61, but a couple ticks from there. Beautiful pullback right to VWAP, right in that 50 to 61.8 retracement area, right off of this little shelf here that we had from all that price action right there. That was support and support 2 times earlier. And that to me was the sexiest play of the day. Why? Because we were going in the direction of our expected bias for the bulls to continue to push higher, and we got a higher high for the day. So the market pushed, pulled back, held the hopeful, pushed to make a higher high. So the pullback to VWAP would have been a great opportunity if you were a bull to see if you could get long and push up to, say, the major retracement we're watching up above. And unfortunately, it never got there. And so the rest of the day was just, it was literally very, very balanced, except for the fact that we did push to a slightly higher high, which was part of our expectation from the bullish bias. So these are the things you want to be watching here on these charts when you're trying to find trade setups. And that brings us into this morning. So I don't think there's anything too revolutionary to mention at the end of the day from yesterday, other than the fact that our major scaffolding level, which was holding perfectly when we got above it for beautiful trades to the upside, held to the downside here for some pullbacks right at the end of the day, and then they popped through in the last few minutes there in the extended session. So that brings us into this morning. Notice that our overnight high happens to be the major fib we've been watching for months. So is that coincidence that we pushed up there just a couple more points through the high of the day before, came right to the major retracement that we've been talking about for a very long time, and now we're pulling back? I don't think that's coincidence right there, only because I see it happen day in, day out, week by week, see the same major retracements holding like this. So pretty interesting stuff. So let's do our full pre-market here. I'm going to jump up to the 60-minute chart, or actually we're going to jump all the way up and just look at the super high time frames here. So check out the, first of all, let's go to the quarterly. So this is very, very interesting to point out. And I don't think I've talked about the quarterly chart since we started our webinar or our broadcast every morning. So just take a look at this. This is each candle is 3 months. It's essentially a quarterly chart. And on the pullback, this is the all-time high that we were talking about back from February of 2022, or the candle that closed on February 2022. Pullback. Notice where the market made its rotation. I think actually I'm going to be talking to one of you guys about fibs soon. Beautiful on one of our calls coming up. Beautiful rotation, couple points in front of the 50% retrace of the whole leg, which we talked about. And we got a bullish signal. Look at what's going on down at the bottom here. Huge RVI divergence. Huge, whoop, wrong button. Huge stochastic divergence. This is a kind of a separate kind of indicator I'm watching right now. Huge divergence there. All three giving a beautiful divergence from that quarterly low. And ever since then, we've been trying to push back up. And remember what I said. We keep getting trouble right at the 50% line, literally to the tick, touching. These are quarterly candles, so for nearly an entire year almost, right? Bam, right to it. Bam, right to 50. Bam, right to 50. And now finally the market's breaking out right to the 61.8, that level I just talked about that we're pulling back from. So these fibs, just unbelievable stuff. And from the quarterly chart, I guess the main thing I want to mention here is that we've been talking about this bullish signal. In fact, we were talking about it being a potential signal back when it was forming. And then when the next candle formed, it was like, yeah, there's a big bullish divergence from there. Does that mean we're guaranteed the market to rotate and push to new highs? No, but there was a pretty good clue. And then as you can see, for the last 6, 7, 8 months or whatever it is, we've been attempting to push and just got our breakout here. All right, so looking at the monthly, looking real strong, right? Look at that huge candle breaking out through the 50% retrace there and right into our 61. And then again, the weekly as well. We looked at this on Monday. Really, really strong. That previous candle may be a little bit ambivalent, but we went ahead and broke through the high this week and looking real strong. So everything looks really strong. The daily also has no clues for the bears right now, and I've been saying that all the way back to last week when we started our webinars here, or our broadcast. All this trouble here, despite there being a lot of trouble, we didn't really have any clues on this daily time frame, or even the weekly really, for the bears. We expected the market to continue to push. It just was a question of, well, how long is this going to be resistance, and how deep are they going to pull back before they break out? Because we just didn't have any signals on our higher time frames for the bears. And sure enough, it's breaking out. And the current candle, if we go up here and look at the previous daily candle here and the candle we're dealing with for today, there's no clue, just from a candlestick perspective alone, that the bears are going to jump in. Now we do have a pretty protracted push here, right? This is now 3-4 candles in a row for the bulls. And typically, yeah, every time you have a move, 1, 2, 3 red, and then boom, back to green, right? So maybe we'll see some type of red candle just from that type of perspective of counting candlesticks, but there's really nothing from my system that indicates there to be a major pullback just yet. But we are up and getting towards more extremes here on RVI, staying up in the strong area. So everything up top, to put it all together here, everything up top, it just has clues for the bulls, no clues for the bears. All right, let's jump down now and start looking at our intraday time frames. And this is where things get a little bit more messy because we have a lot more signals to look at. But essentially, let's see if we can zoom all the way in. And this looks a little messy to me, maybe because we have all the scaffolding levels in here and stuff. But basically, top right here is the overnight session we're dealing with, coming into the open right now. We actually did get a pretty nice bullish signal on the 4-hour from right around the overnight lows. and the market popped up and came right to, again, there's that 61.8 retracement. If we go back to zoom out a little bit and look, this is the push from the all-time high all the way down to the low from October of 2022. Remember, that's where we got our quarterly bullish signal that told us what we could expect an attempt to break back to the upside. And then there's the 61.8 of that leg that we're testing right now. So let's go back to the 4-hour there. That's that level that we're looking at up top. So the market's playing around in there, and we just so happen to get a counter signal from that overnight high up off of the major retracement level. So just looking at this here, we got a nice decent bullish signal from the overnight low. They popped up, and then we got a decent counter signal. So if we can't get through the high of the overnight session this morning, that is a clue for some type of pullback. And remember, we already established on the higher time frames, everything looks really strong. When we get to the 4-hour and the hourly, we actually do get some clues for a pullback. And that's what happens, right? Nothing just goes up in a straight line. There's always going to be, there's always going to be pullbacks or bounces, right? If you're going up, there's always going to be the in-breath, right? There's going to be the out-breath that pushes the market, and then an in-breath to regain some energy, and then bam, continue to push. So these pullbacks, we're getting clues on the shorter time frames here. So this morning, given what we're seeing on the 4-hour here, and not just the 4-hour, but over here on the hourly chart, from the overnight high, we do have a decent bearish signal, and I don't know what's going on here. So that's going to be a line in the sand this morning. The overall picture is bullish, but if the bulls can't get through the overnight highs here, we are expecting some type of pullback. The question always is going to be, how far are the bears going to bring things in such a strong environment, right? And maybe after the FOMC meeting this afternoon, we'll get a clearer picture. But for now, I've got enough signals from the overnight high to give me a little bit of faith until, remember, and within the first hour to the market, I'll have to come back to the 4-hour and the 60-minute. But at the moment, it's basically showing that a pullback would make sense. Here's the thing, and we're going to have to maybe go down. I think we can stay with the 60-minute to look at this. Here's the thing, we're right at the close of the day before. You guys know how important that level is. In fact, all night, maybe we could go to the 512 for this. All night, the close of the day before, whoops, see if I can zoom in, was pretty good resistance until they broke out through it, right? And now here we are bouncing one tick in front of it. So this is really the first level of expected support. Once we got through VWAP, which, by the way, I got to the market this morning a couple minutes before 5 a.m. my time, and we were testing right into VWAP in the Hopel, and I was like, hey, I think I'm going to put a long on right here to see if we can get a bounce up through the major retracement level in the overnight session, and I didn't put the trade on. And now look what happened. Beautiful 5-point scalp I could have grabbed. It went a little more than 5 points, so I could have grabbed a nice 5-point scalp just before the news. But hey, right? Coulda, shoulda, woulda. That's how trading is. I'm just pointing out, the reason I mention this is that's how the cookie crumbles. Some days you put, and that's what happened yesterday when I tried to get long, right? You put a trade in at a level, the market bounces 1 or 2 ticks in front of it, you miss the ball. Sometimes you see a great setup, you don't put the trade on, trade works, you could have made some money. That's how trading is. It can be very frustrating if you don't know how to kind of deal with those emotions, right? For me, it was like, okay, oh well, on to the next trade, right? Sucks, but it is what it is. So anyway, this is going to be our first line in the sand here this morning, is the close of the day before. It also, for all intents and purposes, was a lot of this overnight resistance before the market broke out. So keep in mind, that's kind of where we're at on this pullback right now. So if the bears can pull things back with that 4-hour and hourly signal up top, that's the first area that the bulls could jump back in. Next area is going to be obviously our scaffolding level, which these will become official levels, like I said, maybe a week after we roll over, so I can really confirm that these are actually correlating correctly based off last contracts levels. So they'll stay blue until I officially make them scaffolding levels, and then we'll go ahead and make them gray. So right here, right around 44.16, 16 quarter is another area that would make sense for the bulls to maybe jump back in. All right, so those are the first two areas in there. And then from there, it opens us up all the way back down to 50% of the day before. And you guys know how important that area is as well. So that in the most local area of current market price, those are the levels we're looking at right below us here. On the other side of things, if the bulls jump in here off of one of these levels, which in the end is really what we're expecting given such a strong market environment, if they come in and they bounce it, we've got the Hopel right above us, which, by the way, guys, worked beautifully here, even out of the news that happened right at 5:30 my time, and that break was literally 2 ticks. So the first one that I missed out on buying broke by 2 ticks, and then it went 6, I think about 5.5 points before we rotated back down. Second test there, again, this was the news event. It kind of wicked all the way down and wicked all the way up. Another 2 ticks of break, again, over 5 points to the upside, a little over 5 points. And now coming just before the open here, the market just rejected off the Hopel nearly to the tick. It was also the 200 moving average coming across. See what I mean? Like, if you're going to take a trade and you're going to rely on these levels, they freaking work, or you get out of the trade, right? You don't have to put a 5-point stop in. I see these people that, we keep a 5-point stop, and then once the trade works, maybe we'll tighten it up. It's like, why are you leaving 5 points? If your levels work, you don't need 5 points of risk. Maybe 3 points, right, to be safe, but a 5-point risk on a trade, come on now. You don't need it. I guess if you're not trading with the levels we deal with, you really don't need to take on such large amounts of risk. Anyway, I digress. So let's look at the levels we have up above us beyond the Hopel and the VWAP. We've obviously got the high of yesterday, which, was a pretty decent support once we got through it here in the overnight session. Yeah, there were some pushes through, but there were also some really good holds from that general area. So we've got that. And then here's the line in the sand, really, for the bullish case this morning. If the bulls can push the market through the high of the overnight session, which happens to be our major fib line, if they can get through there, and it's not going to be just a peak above and then fell right back into the range, then we're looking at a push potentially all the way up to just about 44.53 half. So that's a really, really wide spot there, about just about 25 points or so. If the bulls can get through that high, then we're looking at, this is the next area that we would expect there to be trouble for the bulls, and then maybe we'll chop around up in this box. A lot of times that's what we see. If you just look back to the market scaffolding levels, and the 512 might not be zoomed out enough, but they're basically trading within these scaffolding levels and then trading back up into the next scaffolding range. And then, once they get through that scaffolding range, then they're going to come up into this scaffolding range. Of course, once they can get through the major resistance spot at the 61.8. So I think that kind of covers, well, actually, I didn't talk about up above us here outside of that first level. So if they get up through the high of the overnight session, which is where we have our 60-minute and our 4-hour bearish signal, that's really giving us a clue for some type of pullback. Again, we don't know how far the market should pull back, but we do have an idea that the market should be pulling back right now, given the 4-hour and the hourly signal. So if they get through there and we get up through this one, which if we got to have some type of major rally here and push 25, 30 points through it, we're coming up into the next pocket between that 44.54 and this 44.79 up top. So those are the two up above us. That's going to bring us just under 100 points. So let's look at the next level up, and that one's a little further, all the way up to somewhere around 45.22. So make sure these are on your chart. These are going to be those kind of higher time frame or more zoomed out pockets of support and resistance. And then down below us, if the bears pull this thing even deeper than the 50% of yesterday, then we're going to be looking at this push down to 43.8875 area, and then the low of yesterday, which happens to be 81.75. All right, so if the bears are super strong this morning and they get through the low of the day before, then we've got these pockets down below. So we've got this swing high around 69.25 down to about 67.25. We have a 2-point pocket here. That makes a lot of sense if the bears rip this lower as being a potential contention zone for the bears. A little bit further from that, and we're right into the next scaffolding, about 43.6075. And then this level here is, and this is what makes things tough, this level here is a 61.8 retrace. However, let me just bring up the 60-minute to talk about this level. If you zoom all the way out and you look at all these moves up and happening in this bullish push, and I think I talked about this a couple days ago, we've got these very obvious legs. We've got this leg here that leads to a pullback. Then we got this next leg up that leads to a pullback, and this is the pullback from last week when we kept getting trouble up around the highs of the week there, I believe. And then after that pullback, then we have this next launch all the way up to where we are now. So assuming, let's zoom it in to this most current leg right here, assuming we don't push to a new high, because if it pushes to a new high, we're going to have to redraw the fib. All right, so just hopefully you understand that. Right now, if the market doesn't make a new high and we start pulling back and we get all the way down to this area, that happens to be the 61.8 retrace of this significant leg up from the deepest pullback that we've gotten from last week. So the 38 happens to be almost exactly the low of yesterday. The 50 happens to be almost exactly right inside of that pocket that I already established from about 67 to 69. And the 61 is that sitting right there at 43.53. All right, so again, if we pull back this morning and there isn't a new high established in the market, then that 61.8 may be significant. If the market does end up pushing here to make a new high, you're going to have to redraw that larger fib. And I think I just used the wrong button. You're going to have to redraw that whole fib to find out where the 61.8 has moved to. Okay, so keep in mind that one is, I don't know what the best word for it is, but it's going to be there unless we get a new high. All right, and then from there, we're going to come down into the previous weekly highs that we were having a lot of resistance from until Friday when it pushed through. And that happens to be right around here, 43.46 up to about 48.25, another little 2-point pocket that makes a lot of sense for support if the market gets all the way back down there. And then if the bears are strong enough to continue to whack things lower, we've got 50% of last week, and that's not necessarily a level I'm going to trade to the tick for a bounce, but you never know with that, right? But that's more there just as kind of a placeholder or like a heads up, like, hey, if I'm focusing on things on my 10, my 30 minute, my 3-minute, my 512 chart, and I start to see we're coming into this big magenta fib line, I know that's, hey, we've just retraced 50% of last week's price action. So important area to be aware of. Any further from there, and that's going to bring us nearly 100 points lower here. And I guess anything's possible, especially in the type of markets we've been seeing for the last couple of years, then we're looking at a push down into the scaffolding around 43.32. We've got a major swing around here, 43.22 half. Okay, and then we've got the next scaffolding down here at 43.08 quarter. So, and then I'll just mention this final level, 42.87. I think we had it on the chart yesterday. So 42.87, another very, very strong area if they get down there. Okay, so below us, we've established all the levels that make sense. Excuse me. And then above us, we've got the general market scaffolding levels. Again, if the bulls can pop through the 61.8 there. So have a great trading morning. We will see you here tomorrow. And again, hopefully I'll see everybody for the weekly webinar in just a couple hours at the end of when the market closes. So see you then. Take care.